We are going to talk about a popular trading indicator called Bollinger Bands, and they were introduced to the trading world by John Bollinger in 1983. But before we do, if you enjoy the videos that are produced on this channel, please take a second by clicking below and subscribing to the channel. So Bollinger Bands, well, the visual nature of the bands, it makes it simple for a trader to see if price has extended too far from an average price. And this tells a trader if the instrument is priced too high or too low from the average price. And the Bollinger Bands consist of three lines. We have the upper Bollinger Band, and that's set to two standard deviations from the center line. A touch of the high is considered a high price. The center line is the middle line. It's a simple moving average, the SMA, and it's usually a 20-day simple moving average, and it is understood to represent the intermediate trend of the instrument. And the bottom line of the band is set to two standard deviations from the center line, and it's a low price that's considered when interacting in this zone. Now, the upper and the lower bands are also going to contract and expand depending on the volatility of prices. The narrow band is going to indicate a security that's experiencing lower volatility. Wide or widening bands are going to show that the volatility is returning to the instrument. And to learn more about a handful of other indicators, I have a indicator blueprint that you can download for free, and it's going to give you some tips on how to effectively trade with indicators. Okay, this is a daily Forex chart, and it highlights the features of the Bollinger Band indicator. And I want you to note that the touches of the upper band is not just a sell signal, and the lower band touch is not a buy signal. The information, it's only telling that price is either high or low in relation to an average price. Now, John Bollinger, he was clear that the bands are not a trading indicator by themselves that just give out buy and sell trading signals. It's not as simple as buying or selling when price tags the bands, but it can give the trader valuable information to assist them in their trading decisions. So learning how to trade with the bands, I think it's straightforward. But the actual buy and the sell signals that you're looking for, they have to come from a different approach. Markets trend, markets range. And from these price ranges, we can get big moves as price begins to break out from that compression. The squeeze, now not the Bollinger Band Keltner squeeze, it indicates that volatility is not present in the market. So we're looking for signs that volatility may be on the horizon. So here we can see the Bollinger Bands compressed together, and this is a chart of Bitcoin. And trading the band squeeze can be as simple as you look for the squeeze to occur. You mark off the high and low of the forming range. Use price action and structure to look for the possibility of a break in a particular direction. On this chart, we see that price before the breakout is settling in the bottom third of the range. The fact that price is unable to trade higher than it did on the left side of the range, it tilts the edge more to the downside. Now, trading high or low Bollinger Band tags. The 20 SMA is going to show the intermediate trend, and a strategy that can be used to trade these tags are counter trend trades. So specifically, we look for signs that indicate a mean reversion trade is a higher probability trade. So to do this, we want to see a double top or double bottom formation. You can call them the M or the W pattern, doesn't really matter. And I would add to these structures actual price action instead of just blindly shorting or buying on the patterns alone. And using an example here of wheat futures, we can see at 1 and 2, prices put in a double top. And you could trade these blindly, but we can add a simple failure test to aid us in a better entry. And you can see that at number 2, price is poked above the Bollinger Band as well as the high over at number 1. So we can see how price rejected at 1, and that indicates there are sellers in the market. And where do most traders put their stop loss when they're shorting? Well, they put it right above resistance. Price pokes above the resistance, it clears out stops, and your entry can be at the close or use a sell stop below the candle that cleared the highs. And just reverse this pattern into the W pattern, and you can reverse the trading setup. An example of strength or weakness that traders should take note of is when price hugs the upper or the lower band. You have very little in the way of pullbacks to enter the trend, and if you're lucky to be in a walking the band trend, You want to be on alert for any sudden shock against you. And this is a stock of Home Depot, and price is hugging the upper band, giving little in the way of pullbacks to enter that move. We do have the beginning of a squeeze. Can you spot it? But then volatility picks up. So a few good lessons are on this chart where there was a 23% increase in the price of the stock. Now, closes outside or at the upper band do not always translate into a mean reversion trade. Actually, John Bollinger classified closes outside the band as continuation moves. Does the increase of volatility shown, that's via the widening of the bands, indicate a possible collapse in price? Well, can you see how the bands can also show an A, B, C, D price move? So when price is showing extreme strength, the collapse in price can be explosive. And price collapsed about 15% in 7 days. It's vital to ensure you show discipline in taking the profits, but protecting yourself from sudden downward price shocks that can take away a huge chunk of your gains in just a matter of days, sometimes in one day. If facing a chart with virtually no pullback on your trading time frame, you could use a lower time frame to find an entry. And this example assumes that price is riding the upper Bollinger Band and the second last day closes off the high of the day. So dropping to an intraday time frame may show a pattern such as the one that's shown on the right here. And you could simply buy stop the noted location with your stop under the low of the day. Now remember, when these trends fail, they can be violent. So we can design a trading strategy that can be used for very short-term trading, day trading, swing trading, using the Bollinger Bands as explained. And I want to include a measure of momentum. And for that, I'm going to use the MACD. And the settings of the MACD are going to be tweaked to make the 310 oscillator that was made famous by Linda Raschke. And you can watch the video here about these settings up at the top. So our long rules, let's reverse them for short trades. Okay. We need price to interact with the upper band and the momentum indicator to put in a new high. Price must pull back to around the moving average. Now, pullback trading actually has an edge in the market. Enter off of a candlestick or a hook in the fast line of the MACD. Stops can be around the swing low or use the average true range indicator and the targets at the line or 1R, which is 1 times your risk. We can enter a squeeze on a breakout pullback move or using price structure as seen in the squeeze section that we just talked about. And this is a 5-minute chart of gold futures, and you can scalp these setups as well. And it covers many of the things that we've talked about. The Bollinger Bands were in squeeze mode. Price broke out to the upside. Our MACD made a new high. Price interacted with the upper Bollinger Band. Price pulls back close to the average, gives us a decent reversal candle for a breakout pullback trade entry. Price penetrated the upper band, but our momentum indicator has put in lower highs. So we're not allowed to trade any pullback to the average due to the MACD, but we note the high. Price touches the upper band, the MACD puts in a new high, a pullback to the moving average for a long trade. MACD makes a lower high, so no pullback trade is allowed. Price breaks the high, forms a long shadow, sets us up for a mean reversion trade. And actually, this would be a pretty good strategy to use in my trading challenge article that I wrote if you're looking to try that, and you can read that at the link above. So let's sum this up. Bollinger Bands, I think, are a pretty good indicator to help you set rules in regards to the trades you're going to take. The squeeze is going to allow you to find instruments that are in consolidation and may be ready for a breakout. Pullbacks, which are a tried and tested trading method, plus the bands, are going to help you determine which impulse legs may be ripe for another move after the corrective phase. And you don't want to trade the bands by themselves. Adding in the MACD and price action as described is a positive addition to what is a pretty powerful trading indicator. And as with all trading strategies, you have to have a trading plan that includes exact risk parameters. Okay, so I hope you enjoyed it, picked up some great information. And to help you trade patterns such as pullbacks, you can check out my free guide on price pattern trading that you can instantly download on the next part of this video. Thanks for watching.